Well, it's been 1 year, and Jake and Brody here, I don't know who's who, their birthday's tomorrow. Lucky Friday the 13th. Either that is no good or big time lucky. So, happy birthday, boys. It's been an interesting year. They're both teething right now. One has a fever, one has a cold. It's fun, but we're going to have a party for you guys. All right, guys, let's dive in. We got a trade for you in GLD. Oh, he already wants to get into the trade. Those of you who have kids, please tell me it gets easier after the first year. I love them to death, but they are a handful. I guess I'm not surprised. What goes around comes around. I've probably been a handful once or twice in my life too, so I'm getting mine. All right, let's dive in here. We have a trade for you in GLD. We think gold market's breaking down. I'm going to set up an option trade for you here. To set up the trade, of course, we do exhaustive analysis to put the probabilities on our side. And to start, we're going to look at the relationship with the S&P 500 and the dollar and gold market. Traditionally, you expect the gold futures to trade inversely with the dollar. All right, so let's take a look. Pull down the dollar futures here. And it looks pretty good over here up until about November 2014. Then look what happened. I would say the two are almost rallying together. Dollar's kind of gone sideways. Gold's backed up a little bit here. We are short. So not a good relationship with the dollar. We are seeing a better relationship with the S&P 500. So let's bring the S&P down. Look at that. Ever since gold and the dollar decoupled, the S&P stepped in and is trading with a good inverse relationship to the gold market. Okay, why is that? It has to do with liquidity coming out of the market from the Fed, the possibility of interest rates going higher. The need for gold is decreased with higher interest rate environment, and the stock market likes it. All right, so that's the fundamental reasoning, but here's what the charts say. S&P's up, gold down, and we think that's what happened today. Strong stock market move to the upside. I think heading into Friday the 13th, I have a feeling we are net long with clients, so I think the stock market continues to go higher, which should pressure the gold market. All right, so let's go over to the technicals. 3-hour gold futures. I have the Elliott wave analysis laid out for you. Most important thing is, look, we should have held this December 2009 high of 1240 in the continuous contract gold futures. Thought about it, and then nope, peace out. We're breaking lower. Basically, what this chart says is we need to stay below 1245 resistance, okay? Hold that in this blue 4, and then we have a little blue 5 trip down into this nice fib support zone, whereas, let me do my best weatherman impression, right here at the 1200 fib support level, okay? We're going to set up trades to get down to that level. So let's go over to the platform. Actually, before we do, let's overlay the GLD on it to line up and get our levels. Okay, here we go, guys. We have overlaid the GLD, the ETF. That's how we're setting up and expressing this bearish bias over the gold futures. So we just look over here in the left scale. GLD closed around 117.30. The equivalent level from the futures around the 1200, just going over the left, about 115. So we have a 117.5 down to 115. I feel like we're going to do a 117, 115 put debit spread, PDS. What do we have here? On the option chain, the Fed monthlies expire in 8 days. That's not enough time. It's cutting a little close. Let's go out to the Feb 4s, this weekly, fourth Feb weekly series. We're going to do those 117 puts. Delete. We're going to do a 117 buy vertical, 117, 115 put debit spread. Costs us 71 cents for a $2 wide spread at the mid here on the close on Thursday. That's the trade we're going to be looking to set up with clients tomorrow. We are already short. We have the March 119, 114 put spread. But again, we're going to refine that trade and get down into fib support. All right, guys, good luck. Hope that helps. Give us a like on this video if you enjoyed the material. It's a huge help to us. It helps us rise up in the rankings in YouTube, which is competitive. There's a lot of good material out there, so a like is very much appreciated. If you'd like to get this commentary delivered to you consistently, go ahead and subscribe with my little orange subscription button, and we'll get this to you as soon as it's published. All right, guys, good luck trading. Happy Friday the 13th. I think it's going to be a lucky day. See you guys tomorrow.